All right. So this year we have decided to start the sessions so early, and we welcome you to financial management, which is actually a new course to most of you, to all of you actually. So now, financial management is a very crucial course. I've already said that. So you need to pay so much attention to it and understand what it is all about. So in the structure of the way how we are going to learn this year, we're going to move at a very fast rate. We'll be very fast. But apart from that, we'll also make sure that you are understanding. Okay? The way how we're going to be learning is like this. We'll hold the lectures in here, we'll hold the sessions, and in the sessions, we'll solve the past paper questions. This is very important. There are some people that think, oh, we'll join in April, we'll join somewhere there. You understand? That's what they think. But you know what? They think now we are not serious. Believe you me, we are very serious from the way to go. We're going to solve exam questions. Exam questions. We don't want to panic. We are going to be solving the tests questions. We are going to be solving the quizzes and the assignments, right? Assignment questions. We will not just end on that. You know what other thing we're going to do? I am going to give you tests. I'll be giving you tests periodically. Please get prepared, get ready. I need to be assessing time again and again to check how you're progressing, okay? We're going to be having tests and a bit of some assignments, right, from here. So that when you go to write assignments from the university, from UNZA, that cannot really pressure you. And this is what we're going to do. Of course, we'll make sure that we prepare you fully such that even the assignments from UNZA, you can manage to handle them on your own. The tests that you're going to be writing from UNZA, you can do them on your own. The exam should be very easy for you, even in this very hard course, so that at the end of it all, you are able to even mentor others. We want you to be able to teach others. That's the degree at which to which we want to train you in these courses. And that's an outline. We're going to share the timetable that you're going to be following. Is there any question? Are you able to hear me clearly before I start now giving you the outline of the course?
I can hear you, sir.
All right. That's fine. Now let's zero in. Let's say get started. And we have financial management. What is financial management? Now, for you to understand properly what financial management is all about, I want you to learn with me and focus on a financial manager. Let's look at a financial manager or a finance manager, right? Who is a finance manager? Who is a finance manager? What are some of the roles that a finance manager plays, right? When you understand who a finance manager is, the functions of a finance manager, and the critical roles that these managers play, then you will be able to actually answer and understand the general idea and the rationale behind the course, financial management. Confirm you're okay up to here. And you're okay with the speed.
So far, so good.
Okay. So now, financial managers always are faced with the following decisions. These are the decisions that they make on a daily basis. These are people that need to make decisions. Number one, they make what we call these. You pay attention, everything I teach from the way to go is very serious. It's examinable, by the way. You can have an exam question, actually it's an exam question on the roles or the decisions that are made by managers. So get this one very serious. Everything I'm talking about is very serious. Dividend decisions. This is one of the first, decisions that they make. They are what we call investment decisions. I'll talk about them in details. Investments decisions, right? And they do make what we call financing decisions. These are financial managers. Okay. What did I say? They make their roles or the major set of the roles that they play are divided into how many? into only three: dividend decisions, investment decisions, and financing what? Decisions. Is that clear?
Clear.
So now these rows are summarized. Actually, these rows summarizes the entire course of financial management. Okay, financial management is basically about these roles, preparing a financial manager to carry out these roles. A financial manager, for him or her to carry out their duties very, very well, what do they need? They need to be trained. They need to undergo a certain training, robust, critical, serious training. And in the training, they go through financial management. They learn how to manage finances in what is known as financial management. And the following are the roles. So I'll go through these roles or the decisions one by one, and some topics that you find within financial management that help a manager to play that role professionally. I'll repeat those lines. What I'm going to do, I'll pick these roles one by one. For example, dividend. Then I'll show you some topics that will cover within financial management that focuses on just helping a manager make the dividend decisions very well. I'll talk about financing decisions, and I will talk about investment decisions as well, and also show you the topics that are properly related to that. Is that clear? Hello? Are we good?
We are good, sir.
Okay. Having said all that, I'm summarizing the whole course, by the way. This is the whole course I'm giving to. Let's start with the financing decisions. Financing decisions. What about financing decisions? The managers are always given the task of looking for the money, right? They got to find out, where are we going to find the money? Remember, the company, the entity, the corporation always has activities that they need to fund, right? There are always those activities that need to be financed. And since the activities need to be financed properly, right? There is a need, okay, of the finance manager looking for the money, because it's not always that they'll always find the money from within the business. They need to source money from somewhere, right? So that when this money comes to fund and finance these activities can take place within the business. Is that clear? Have you understood the general idea behind financing decisions? Are you good after financing decision? What we do when we are talking about these decisions?
Yes, I think it's clear.
Okay, and for that reason, there are some topics that we are going to do within financial management, which helps the manager make this decision well. Courses, such as sources of capital, sources of capital, right? Sources of finance. Let's call it sources of finance. Okay, sources of finance. There will be a topic that we are going to do within financial management, it is aimed at training you as a financial manager to know what sources of finances are fully available to you, or what options are available when you are thinking, when you are planning that you're going to get what? You're going to get the money, isn't it? You're planning, you're thinking, where am I going to find the money? Financial management will give you the skills, will train you on the various options that are available, okay, for you as you are deciding, so that you can easily choose from these various options. So we'll look at the topic. There'll be a topic within financial management called the sources of finance. I've told you that the focus of that topic is to help the financial manager to make financing decisions. Sources of finance, both that are broken down into external and internal sources of finance. Internal, the money is gotten from within. Those sources are from within the business, and the external from outside the what? The business. We'll look at that. We'll look at that. We'll talk about that in details, actually. We'll zero in. Then we'll also look at a certain topic. And the topic that you're going to look at, it is called, working capital management. Working capital management. Right? Working capital management. You're going to learn how to manage working capital. And when we talk about working capital in this case, we're talking about things like cash. These are elements that form working capital. Inventory, debtors, or let's say receivables, and the payables. These are the elements of the working capital. So here, this topic is training a financial manager that on how they can be working and managing the working capital. And when you talk about working capital, we're talking about cash of the company, the inventory or stock of the company, receivables referring to just the amount of money that you're expecting from the people that you sold to on credit. There are some clients, right, that you sold to the goods on credit, and then you're expecting some amounts from them. So what you expect actually is what we call accounts receivables. And on the other hand, there are those suppliers that supply to you on credit, right? The amounts that you're expecting from them is called what? Payables, right? You call that payables. So basically, the management of that, how do you manage the suppliers that supply to you on credit? How do you manage the people that get, goods on credit from you? How do you manage the inventory, the stock, and the cash? Is what you call working capital management. It's one of the special topics that you're going to do as well. It's aimed at training the financial manager, giving him the skills on financing decisions. We're going to do a topic called cost of capital. Cost of what? Capital. Hello, are we still there up to here? Or I'm speeding? Should I slow down? Are you understanding? Hello.
We are getting there.
Okay. On cost of capital. What is cost of capital? First of all, let me break down capital, what we mean by capital, so that you understand. Each capital of a company, right? Each company that you have, they have got in their capital structure, they have what we call the capital structure, the money that you start with running the business. So it can be the money raised from the owners or from the shareholders, right? By selling shares, or the money that you've got from the people who are part of the owners, who are the owners of the company. It is called the equity. Then on the other hand, you can get debt. Now listen carefully. You can get what? Debt. What does it mean to get debt? It simply means that when you have these people that you have sold to on, you have got these people that have given you money, or these institutions, they give you the money, then you're going to pay back later with an interest. That is debt. For example, you go to the bank, you get a bank loan, right? You get a bank loan, you're going to pay back that amount with an interest. Or you go to the public and get a loan from the public, what is known as a venture. You're going to pay back that amount again with an interest, okay? When you raise money from outside the business that you're going to pay back with an interest, that is called a what? Debt. That is called the debt, okay? In the capital structure of a company. I want you to pay attention because this topic is very crucial. It's all these things I'm talking about, they are all examining. I don't just say things that are not important. Debts, all right? That's called debt. Then equity is basically the money that you raise from the people who are going to become part of the owners. So this money doesn't need to be paid back with an interest. Is that clear? Okay. So now, this equity that you hear about, the money you raise from the shareholders, it's not for free. right? No person can give you money for free. They expect something, those shareholders, right? They expect to receive something. Now, the amounts that you're going to pay, a compensation actually that you're going to pay to the shareholders is what you call costs of what? Equity. I want you to pay attention. It is called what? Cost of equity. The cost that you incur as you raise the money from the shareholders, the compensation that you give the shareholders. It could be dividends, right? Usually dividends and all those things that you give them. That's the cost from your end. Even debt comes back, you need to pay back with an interest. That is called cost of what? Of debt. It is called what? Costs of debt. So now, what do we do when you're looking at cost of capital? Here we are trying to weigh a financial manager is thinking, I have two options to raise the money, okay, to add the capital structure. Should I sell shares, right? Or I should get a debt from maybe the bank, get a bank loan or issue debentures or get a bond or issue a bond. What really am I supposed to? That is what this topic is all about. It is just about that. It aims at helping a financial manager to make a sound financing decision. Is that clear? Are we good with financing decision? Yes, sir. Your hand is up and you're welcome.
Thank you. I just wanted, I've heard this word, but do not take time to check it up. What is a debenture?
Oh, thank you so much. What is a debenture? A debenture is a loan. You understand a bank loan, right? A bank loan is when you go to raise the money, you ask from the bank. You ask the bank to give you the money with an interest. They'll give you the money that you have to pay back with an interest. If you get that loan from the bank, it is called a what? A bank loan. Now listen carefully. There is some time when you decide to get this loan, but you don't want to get it from the bank or from anyone. You get it, right? You want to get it from the public, okay? You want to get it from the public. And by public, I mean it could be any individuals or any company, anyone else. And usually, this loan is longer term. It's long term, usually long term. 5 years, 10 years, 15, 20 years, they are long term. So you get this, you advertise. Then people who have money now from the public, they are going to bring the money to the company, okay? Bring the money to the company. You will give them a paper. It's a piece of paper that shows an agreement. It's an agreement. You say, oh, all right, we owe you this much. We're going to pay back on such a date, maybe after 10 years, on such a date, and they will give you back with a certain interest. You get the point? And then you leave the money there. The person leaves the money, and the company gives just that piece of paper, and they keep records. And that is how it works. And usually the debenture doesn't have collateral. There is no collateral. The company is not promising anything that, no, if we fail to give you or give you this in return, there is no collateral. You just give the company money. And so it's a loan as well. It's only that it is raised from the public and it is long term, very long term. Then the bank loan obviously is from the bank. Are you good?
I'm good. Thank you.
Any other question? If I don't have any other question, then we can go to the other set of decisions that the company makes. They're what we call now investment decisions. Investment what? Decisions. We have raised the finances, right? In what is known as financing decisions. Then we need to decide where we're going to invest this money. Then there is what we call the topics such as investment appraisals. This is the topic that you do. It should be topic number 7 on the course out. Investment appraisals. This topic is aimed at helping you as a manager to make investment decisions. Investment appraisals, by definition, these are basically the techniques that are used to test the validity or the viability of a project, right? An investment option. The options, right? Those options that are available, right? The options available to the managers, okay? The investment options available. So when there are those techniques that you are using, test the viability. That is what we call investment appraisals. You understand that process of appraising, choosing, an investment option. There is that topic. It focuses on helping you to make that sound decision. You got to make that decision. Yeah, you have to choose this investment option. And investment appraisals shall help you to make such a sound decision. Is there any question? Do you have any questions?
Not at the moment. Thank you.
Okay. Then there will be another topic that we'll do apart from investment decisions, right? This one is called financial statements analysis. Financial statements analysis. Very crucial. You always have a question on this one as well. Yeah. These, they do come, all of them. Whatever I'm saying is examinable. Financial statements analysis. What about financial statements analysis? This is where you learn how to study and read the financial statements, extracting key information about a particular company from the financial statements that they publish. Remember, the financial statements are called published accounts, right? The financial statements, such as the profit and loss statement, statement of profit and loss, the financial position statement, that's called the balance sheet, isn't it? Sometimes you call it the balance sheet. The balance sheet, the statement of cash flow, and the statement of changes in equity. Now, those are financial statements. You need to be trained on how to analyze those, because if you analyze them properly, it will help you to extract some information about a certain company. When you extract that information, right? When you extract that information is what you're going to use to make a decision whether to invest in the company or not to invest. Is that clear? Financial statements analysis. We'll do that one. Do I have a question? Are you okay with that? Just here again, we do bond valuation. And when we do all these topics, and within the investment decisions arena, you're going to do time value of money, which is the first topic actually that we start with. Time value of money is also a topic, just helping you to make the investment decisions. Are we okay with the investment decisions? So that we look at the last set of decisions that we make. They're called the dividend decisions. If you're good with this, then we can go ahead and look at the dividend decisions. Now, what are dividends? Right? Dividends. When the company makes profits, there is a decision that is made, right? There is a decision that is made. The decision that is made from that profit after tax. The company decides, says, okay, out of, let's say they have made 100,000. They'll say, I think a certain amount out of 100,000 should be given to the shareholders, right? Let's say maybe 60,000 should be given to the shareholders. The other 40,000 should be kept into the business to fund the growth or to sponsor the growth of the company. This 40,000 that you've kept in the business to sponsor the growth of the company is called the retained earnings. Okay? It is called the retained earnings. But this 60,000 you're going to give to the shareholders, right? To the shareholders, it is called dividends. Dividends. Okay? That's what dividend means. So now, when you talk about dividend decisions here, the company is, the manager is thinking, out of this profit that we have made, how much should we give out as dividends and how much should we keep within the business as retained earnings? Just deciding between these two. How much should be retained earnings and how much should be dividends? You are making that crucial, very critical, and very serious decisions. Okay? That's about dividend decisions. Now, what important topics are we going to do? Just to help us, answer or make sound decisions, or helping us actually to make the dividend decisions. This is what you're going to have, number one, right? To start with, we shall have, okay, we're going to have a topic called dividend policy, right? Dividend policies. And then we'll have a topic called business valuation. Just that. Business valuation and dividend policy. When you look at all these topics that I've mentioned, they summarize the whole course of financial management. If a financial manager has done all these topics in real depth, they would have, in summary, known how to make what? Number one, the dividend decisions, the investment decisions, and the financing what? Financing decision. That's a focus of financial management, to train you on how you make these decisions. Dividend decisions, how to make investment decisions, and how to finance the projects, how to source for financing, what is known as financing decisions. Is there any question? Do we have any questions? That's about financial management. Is there any question now?
Yes, just to take you back a bit, what you earlier stated as the cost of equity is actually on the side of the shareholder. It's what is known as dividend. Or
right, yes. On the side of the shareholder, yeah, that's right. But on the side of us, the company who is giving those dividends, it's a cost to us. Okay. That's a good one.
All right.
Any other question? Priska, I welcome you to the class. Please feel comfortable. Do you have any questions, any concerns? I'm here.